Who can relate? We always worrying about savings losing value and running out, but the Nobel Prize has been awarded for 120 years and it actually keeps growing more and more. How exactly does this happen? Going back to 1896, when Nobel passed away, he left an estate of 31 million Swedish kronor, which is equivalent to approximately 2.2 billion Swedish kronor in today's market value, designated for awarding prizes. His will originally required the fund to invest only in safe securities like government bonds, which seemed reliable, but by 1945 the purchasing power of the prize money had dropped by 70%, barely enough to buy a mid-range car, and everyone at that time thought this money would eventually run out. The turning point came in 1950 when Sweden relaxed investment restrictions, allowing the fund to finally enter the stock and real estate sectors, coupled with the tax exemption obtained in 1946, which saves 40 million Swedish kronor every year. The fund has been on a growth trajectory ever since. Today the fund is managed by top institutions like BlackRock and Sequoia Capital, with a highly diversified portfolio: 56% in stocks, 24% in alternative assets, 12% in bonds, and 9% in real estate. This is by no means luck, but a model of long-term investing. Numbers don't lie. Starting from the initial 31 million Swedish kronor, it has grown to 6.8 billion Swedish kronor by 2024, a staggering 120-fold increase. Just like when we manage our daily finances, we spread our money across different types of investment products instead of putting all our funds in one place, which can effectively reduce risks. Its strength is even more evident during crises. During the Second World War, they converted their assets into gold and Swiss francs, suffering only a 12% loss, while the stock market plummeted by 70%. During the 2008 financial crisis, they reduced their stock holdings in advance, limiting losses to 8%. The core secret is restrained spending, withdrawing only 4% of the total assets every year for prize money and setting aside an emergency fund for 2 years. Even if the market is sluggish, there's no need to be forced to sell assets at a low price. This is consistent with our financial management idea of setting aside 3 to 6 months of living expenses as an emergency fund. Their mechanism is also particularly flexible. When investment returns were poor in 2011, they temporarily reduced the prize money from 10 million Swedish kronor to 8 million. When the market was good in 2024, with a return rate of 11.6%, the prize money was increased to 11 million, setting an all-time high. Behind this lie 3 wealth principles that ordinary people can also use. First, the power of compound interest. Adhering to reasonable investments in the long run, even small sums of money can continue to appreciate. Second, diversification, just like putting eggs in different baskets to reduce single risks. Third, rational consumption, restraining unnecessary expenses to leave sufficient space for investments. After learning about the century-long operation of the Nobel Fund, do you have new ideas about financial management? How do you usually plan your funds? Are you more inclined to stable investments or willing to try diversified allocation? Come and share your financial management experience in the comments section.